management of Dangote Cement today visited the Nigerian Stock Exchange to engage the investment community on its financials for half year 2016. In his opening remarks, the Executive Director, Market Operations and Technology, the Nigerian Stock Exchange, Mr. Adebajomo, lauded Dangote Cement for its strides in the Nigerian and African market.
On behalf of the Council, Management and Staff of the Nigerian Stock Exchange and the entire capital market, I welcome the board and management of Dangote Cement PLC to this Facts Behind the Figures presentation. We are pleased that you've come forward to provide the market with more information about the strategic and financial development within your organization. As the market is driven by timely, relevant and accurate information, your regular interactions with the market through this forum are very welcome, and we encourage you to continue with this trend. It goes without saying that Dangote Cement has risen to become the leading cement manufacturer in Nigeria and indeed Africa. We congratulate you in your continuous efforts to maintain Africa's leading cement producer within 3 foremost plants in Nigeria and several operations in about 17 other African countries. Your company has successfully put a halt to our country's need for imported cement, and in the process creating jobs, reducing foreign exchange hemorrhage, and making Nigeria gradually become an exporter of cement to African countries, all thanks to Dangote Cement PLC. We're pleased to know that the management of Dangote Cement have also embraced the highest levels of transparency in corporate governance, demonstrable via their admission to the Premium Board of the Nigerian Stock Exchange. Going forward, we would like to challenge Dangote Cement PLC to continue to build on its culture of excellence, innovation, leadership, customer service, and professionalism towards attaining a deeper social impact, higher regulatory compliance, and greater returns for shareholders.
In his presentation, the CEO of Dangote Cement, Mr. Onne van der Weijde, gave an overview of the half-year 2016 performance, highlighting the 60% growth in volume sales and 20% revenue.
If you look a little bit higher, you will see that where our growth actually is coming from. And you see that the Nigerian growth was actually 4.2%. So our revenue grew with 4.2% in Nigeria, but you see that most of our 20% growth actually is coming from outside Nigeria. So our strategy to diversify and to reduce our risk and to go outside Nigeria into the neighboring countries is paying off, because as you see, we have grown 20% top line growth outside Nigeria, which is helping us to cope with the less favorable economic conditions which we are facing right now in Nigeria. What you also see, and I'm very proud of that, is that actually if you look under the line operational highlights, we grow our volume with 60%. And that is by no means a small achievement, because to grow volume, and I've never experienced that actually in my life, and I've been for 20-25 years making cement. But if you grow 15%, that's quite commendable. But the way we have been growing at Dangote at 60% in difficult circumstances is quite a good achievement. So all in all, I'm very proud to present to you the results, a 60% increase in volume and 20% top line growth. And what it allowed us to do, and you as investment community are probably very familiar with this, we used our operating leverage to achieve this. So we were using the same assets by reducing prices, by expanding into other markets. We used our operational leverage to offset a lower price. That's why only the revenue grow by 20%, where volume grow with 60%. The 40% difference is basically what we have reduced prices with. But as you will see, we go to the financials, we actually got compensated for the higher volume. So on an operational level, we are almost at the same price. So I think this strategy helped us to actually cater for and do well also in difficult times. This is to say in financial word what I was saying before. You will see here 2015 compared to 2016, and you see the percentage change. But I think if you look at it, especially for the profit before tax, you see that the profit for the period is about 100 billion. So I think, again, that is a very proud number that we have achieved about 100 billion profit for the first half of the year. The the growth compared to last year is maybe a little bit lower. Last year we had 120 billion, but there were some more financial support we had in the previous half. If I look forward, I assume, and we're working on that, this kind of a profit level, that we can maintain that going forward. You see here where our costs are coming from, and you see the majority is our fuel. Normally we fuel our kilns on gas. Secondly, you see here, these are the costs of our power plants. And again, usually these costs are, and these plants are fired on gas. As we speak, our plants hardly have any gas available. And this is a very big theme for us. That means that, like the power plants in Nigeria, where the consumers and companies equally are affected, we are very heavily affected by the absence of gas. I come to speak for it, but compared to last year, in June, July, there's hardly any gas available. But even though there is no gas, we are capable, and as you will see, we are still producing. You see, we started the year on the 1st of January with 204 billion of debt, and 204 billion of debt is less than, basically, hopefully, 1 year's of profit. So we have, your company is a very strong company, also in terms of balance sheet. We don't have any bank loans in dollars. Whatever we have in bank debt or in third-party debt, interest-bearing debt, is in Naira, and even that is only 200 billion Naira.
Mr. van der Weijde speaks further on the operations and outlook for the company.
We're very happy to report a 20% growth in top line and a 60% growth in volume line. So very healthy growth in our operations. If I go further down the bottom line, on operational level, we are more or less at last year's level, and we have about 100 billion Naira in profits.
What's the outlook for Dangote in the second half of this year, and what should shareholders be looking at?
Very healthy growth. We have had a growth of 60% in volume and 20% in revenue. I cannot promise that it will be the same growth, but I think you see that our strategy is working, our foreign subsidiaries are contributing, and I foresee a very healthy growth for the remainder of the year.
With a remarkable growth in volume sales, revenue, and a slight dip by 10% in profit, Dangote Cement has shown resilience despite the challenging economic environment. Major concern to investors and market stakeholders will be how it manages the forex pressures, Naira devaluation, through its planned shift from gas to coal-powered plants.